Hey, what's going on, everybody? Today we're talking Global X Lithium and Battery Tech ETF, ticker symbol LIT. As a disclaimer, this is not investment advice. This is just a research video I put together meant to be educational as well as entertaining. I'm going to highlight a few news clippings and articles surrounding this ETF, how it's managed. Then we're going to take a look at its stock and see its performance as of lately, at least since the March lows. So thank you for joining us today. Please like, share, and subscribe. Enjoy.
The Global X Lithium and Battery Tech ETF basically tracks global lithium miners and battery producers. It's a classic theme ETF in that it goes across a bunch of sectors, including chemicals, miners, auto, electrical, and has a variety of countries in there. Pretty big at 615 million, 75 bips, a little on the high side, but for a theme that's pretty normal. Let's look at the holdings. And this is what caught our attention this week is Tesla. This is one of the ETFs that owns the most Tesla, number 3 here at a 6% weighting right there, 11% rather. So Tesla really driving this thing lately. Let's look at the performance of this versus the all-country world index, which is all I could think of to put against this because it's so unique. And you can see this is the all-country world. This is lit. So you're going to get a lot of volatility here. They both end up about 50%. So I think, Scarlett, this is going to have to come down to whether people are really into this industry and the whole battery theme. But there are some opposing forces in the portfolio they have to watch out for.
All right, way to incorporate lit into your commentary there, Eric. All right, still with me is Jay Jacobs of Global X. Jay, what is the case for buying lit to capture a performance like Tesla versus just buying the star performer itself, Tesla?
Sure. Well, I think Tesla is kind of the poster child of the electric vehicle revolution, but it's 11% of our fund. That means 89% of the fund is other things besides Tesla. You have battery producers, you have lithium miners. There's a much bigger ecosystem that is supporting the rise of electric vehicles beyond just Tesla.
Yeah, and with that, one of our analysts was saying how, well, if the price of lithium goes up, that's good for the miners, but then bad for the people buying it. Are those forces working themselves out in the portfolio? How do you account for those?
It's actually kind of a misconception because lithium makes up about 3% of the cost of a battery. So lithium prices can rise, but you can still see falling battery costs because battery producers are getting more and more efficient. To give you some context, about 10 years ago, batteries cost about $1,000 a kilowatt hour. Now they're $100 a kilowatt hour. And lithium prices, have actually risen over that time frame. So battery prices are still falling even as lithium prices increase.
You mentioned that Tesla makes up 11% of the fund. How does it work when an individual stock gets this hot? I mean, this is a market cap weighted ETF. How does the ETF respond? How big do you allow any one name to get before you rebalance and take down some of that influence?
Yeah, so when you create an ETF, you always have to think about these things. Do you want to have just completely a free float market cap, or do you want to have caps on individual position sizes? The lithium space is a bit unusual because it's super concentrated. You have 5 lithium miners that produce about 66% of the world's lithium, and you have 4 battery producers that are kind of the controllers of battery production. So we have a pretty high cap on an individual position size because it's so dominant.
What is it?
It's about 20%.
Oh, so it can get a lot bigger.
Yeah, and another one you have is Drive. It's electric car ETF, and Microsoft is the biggest holding. So what's the case for Drive versus lithium, and why is Microsoft the biggest holding? That could be a knife quick.
By the way, Tesla is in Drive too, right?
Yeah, Tesla's in that one too.
So I think ETF investors need to get comfortable with this idea of intensity, right? This can work for factors, this can work for ESG, it can work for thematic ETFs. How much do you want narrow focus on an individual area, or do you want to be broader and own the ecosystem? Drive is kind of our broader exposure to the electric and autonomous vehicle space. So it's pulling in companies like Microsoft that build the cloud solutions for autonomous vehicle technology, and it pulls in the Teslas, and it pulls in the lithium miners. Lit is just that really focused approach of just those mining and battery companies.
It's nice to hear from Jay Jacobs, the head of research and strategy for Lit. A quick look at its sector breakdown. Materials and industrials leading the way for this ETF. Its country breakdown: China, United States, South Korea, Japan, Australia, Chile, Taiwan. So I like to hear from either CEOs or head of research. A quick look at their top 10 holdings, and it helps me understand the process of how the ETF is managed. And we see here that they rebalance, that they're not always focused on a certain percentage allocated to a singular company. So I like their top 10 companies here: Albemarle, Tesla, the top 2. So they kind of go back and forth, and I'm not gonna go too deep into their top 10 holdings. I just wanted to showcase some recent news, and this article is coming from the ETF's website. I'll leave it in the description below. Further regulatory support and infrastructure help as well with carbon reduction mandates and the build out of hundreds of thousands of charging locations. Companies and consumers may be more incentivized to buy EVs. Owing to these factors, analysts estimate range from 25 million to over 45 million EVs by 2030. So we just see here by this chart that there's going to be, at least by estimates, certain analysts are predicting a very, very substantial increase in the EV market. Tesla's next factory, which is going to be in Austin, is going to happen quickly. So just again, some more insight as to Tesla's massive new lithium-ion battery factory could add to the equivalent of 1 terawatt hour or 1,000 gigawatt hours to global battery output. For context, the factory's capacity would be 28 times bigger than Tesla's already massive gigafactory in Nevada. If the Terafactory ramps up as planned, it could increase global battery capacity by 40%, supplying 69 million vehicles with batteries. So, just to try to wrap your head around the space of what a gigawatt hour, terawatt hour is, we'll take a quick look.
This sucker's electrical, but I need a nuclear reaction to generate the 1.21 gigawatts of electricity. 1.21 gigawatts! 1.21 gigawatts!
So, how much power is a gigawatt or gigawatt? 3.125 million PV panels, 431 utility scale wind turbines, 100 million LED bulbs, roughly 1.3 million horses, pretty impressive, 2,000 Corvette Z06s. So, the amount of power that is moving these factories and their capacity. So we'll take a quick look here at a few different charts. The lithium-ion batteries, their battery plant size. So we see here on the left the average lithium battery plant and how Tesla's gigafactory is just going to or it is already substantially bigger than the average, and then the Terafactory, which is going to just crush it. And then we see the battery capacity, just the 2029 prediction with the Terafactory. So the lithium demand by 2029 is just, it just looks to me, just from what I'm seeing, what analysts are predicting, that the market is going to, there's going to be a market for it. So the demand will be there. So the supply needs to be there. That's where this ETF really stands out for me. There are other plays for lithium. However, I like the broader range of the miners and the battery producers and companies that are really moving in this space. A quick look at my trading view, my 6-month trading window of LIT. I'm just going to highlight some levels of support from the March lows. And it has been on a nice run. There's been a few pullbacks here and there regarding news with, it kind of ebbs and flows with their bigger holdings. So like every time Tesla has some news break out, you'll see a little something occur with the ETF, which happens a lot with ETFs that allocate a large percentage to certain companies. So its most recent level of support in the high 30s, it broke out of that level of resistance earlier in the year. So that's what I'm just highlighting there in the bright purple. So a level of resistance can become a level of support, showing some health. So I think if we can stay here, again, I'm making this video Monday, August 31st, and the market is already since open, so the price has bounced around a little bit. So it's kind of like a little intraday pre-market recording that I'm doing. And I think that if we can bust out of the 40s and create a new level of support, that would be pretty sick, at least in my opinion, for this ETF. And I think I'm going to leave it here. If you have any questions regarding any more companies or ETFs that you'd like me to research, please don't be shy. Leave them in the comments below. I appreciate your time. Thank you for viewing. Please like, share, and subscribe. It really helps out the channel a lot. I really do appreciate it. All right, I'll see you on the next one.